Warren Buffett has made some great moves this year, especially with how patient he was after the whole CCPV crash that we went through. He was waiting, and then was buying right when the time was right. And you know, we've been tracking this thoroughly on this YouTube channel. What do we got, like 15 Buffett videos now? Well, here comes 16. But we keep so close track of him, not only us, but everyone in the investment world, because he's so accurate and he's been doing so great for so many decades. But this also does kind of backfire on a lot of us too. Because guess what? You are not going to be successful in the stock market by hanging on Warren Buffett's every last word, treating it like gospel. Because in reality, Buffett is worth how many billions? You know, he's playing a different game than you are. So in this video, we're going to talk about another way in which he's not so straight up. Now, like I said, we're fans of Buffett. I actually just put together this playlist on all the videos we've done where we go over his strategy and all the important things we can learn from him. So you should definitely check out those videos. I'm going to put a link in this video and down below in the description and comments. But even though, yeah, we love Buffett like everyone else and want to learn, there are also times where we need to be critical of him. So this video right here, number 5 in this list, that's one of the ones where we talk about how he actually uses his power to promote monopolies just so he can make money. It's not all sunshine and rainbows with Grandpa Buffett. So when you're looking at this playlist, definitely check this particular video out as well. And also ignore the titles. They're just optimized for the algorithm. There are good lessons in all of these videos. That's why I put them in the playlist. And don't forget, if you want to take a shortcut to making money in the market right away, consistently, day after day, then make sure you check out our free training. There's a link in this video and down below in the description and comments as well. And we're going to talk about it more in the video, but yeah, you could learn Buffett's strategy, but it's not necessarily going to directly help you because you got to make something that works for you at your level. And this strategy that we talk about in this training, the same one I use and all of our Fallible members, it makes amazing returns, but it's also more geared towards individual investors like ourselves and not a guy who has so much influence on the government like Buffett. So anyway, definitely check that out. Now, what we're going to talk about today is one of the secrets of Warren Buffett's success, which he is not going to tell you because it's not part of his image. But that secret is the way that he defers taxes. And again, this is something that we're going to go over that none of us are going to be able to do unless you own some type of conglomerate like he does. So, you know, it's just one of those advantages that you don't hear about because all you're going to hear about from him is just buying good companies at good prices. Sure. Yeah, that's true. But this is also true, the way you play with your taxes. And again, I'm not saying it's a bad thing, like this is all perfectly legal. But when we're tracking Buffett, we got to understand what he's actually doing versus what he's saying. So Warren Buffett is one of the most famous and certainly the richest proponents of raising taxes. But what's often less remarked upon is that he's also a leading proponent of delaying tax payments as long as possible. And keep in mind that this article is actually pretty old. It's from 2015, but the idea still stands. And this author is a little salty because, yeah, he's all about raising taxes because he knows he could duck them. So others get to pay while he gets to defer. So Berkshire has been able to defer 61.9 billion of corporate taxes. That's what they revealed in their annual report. It's probably their 2014 annual report. But that figure is 8 years worth of taxes at Berkshire's current rate. And it's a reminder that Buffett understands how putting off the moment when taxes are due gives him more money today to invest elsewhere. So that's a big thing with Buffett's strategies, right? He avoids paying money so that he can use it to invest. And he does it with taxes, and he also does it with insurance floats, which we'll talk about in a second, because Berkshire is an insurance company too, right? That's been a huge advantage for him over the years. So this is just a reminder that a savvy approach to taxes has always been a feature of Mr. Buffett's career. And these deferred taxes just get bigger and bigger. So those taxes reported at the end of 2014 is more than 5 times the level of a decade ago. And like I said, it is completely legal because he's following the US tax code, and the US tax code encourages capital investment because of the way that it treats the depreciation of assets such as power plants and rail infrastructure. And during this time, he was acquiring railways and a string of US power companies. They all have heavy capital, as in all the buildings, like the railways themselves. All that is considered capital. So with all that infrastructure, companies are allowed to record profits that are not taxed until later in the life of those assets. And Congress even expanded these incentives for business investment in the wake of the financial crisis. So basically what happens when you run a business, when you buy an asset, like a capital asset that you use, you can depreciate that asset over a long period of time. And every year where you depreciate that asset, depreciation means like if an asset is worth $100,000, maybe in the first year you say, hey, $5,000 of that asset has been used now. And you do that every year until it goes to zero. That's some boring accounting for you. But again, you need a business to do this. So Berkshire, being a huge business, they could do it with like power plants and things like that. But what you can also do if you have a small business, and this is what I learned from my best friend who's a wealth manager, there's certain rules in the tax code that you could exploit. So you'll see a lot of business owners have really big trucks and Escalades. Well, maybe not Escalades anymore, but the point is they have heavy vehicles, because what they're doing is they're buying a certain vehicle that they can mark down as a business asset. But that vehicle has to be over a certain amount of pounds. Again, these are all weird tax rules. I don't really understand them because it's not my job. That's why you get a good tax guy and a good wealth manager. So if you buy this huge truck and you put it under the business, then you could depreciate it over time. And by the end of it, because you're saving in taxes, the truck ends up being free. So again, it's the same type of tax games that every business owner is playing, and Buffett plays a lot. And it really does help a lot. As you can see, they deferred $61.9 billion worth of taxes. So you depreciate a certain amount and you get that amount as a tax break on your taxes. Now in Berkshire's case, they also received tax credits for renewable power generation. They reported 258 million of wind energy tax credits in 2014 and 913 million of investment tax credits in 12 and 13 for opening new solar power plants. So the great thing about deferring these taxes is that Buffett can use that money for other investments that compound their returns over time, because that is one great lesson from Buffett that he always talks about. Time in the market is very important. Keep that money in there and keep compounding it over time. And compounding is one of the most powerful laws of the universe. That's how you really build wealth. And that's why they always tell you invest early. And with that tax deferral, Buffett is basically calling it an interest-free loan from the government. So yeah, he's taking full advantage. But this deferred tax is only one of two forms of interest-free leverage used by Berkshire. Buffett also invests premiums from Berkshire's insurance business. Before they have to pay their claims, they take that money and invest it. And the size of that insurance float has increased from $7 billion to $84 billion in 2014. And this is another fact that Buffett critics like to bring up, that he has all this insurance float, all this money that he can use that you don't have. And he doesn't even talk about that ever, about the leverage that he gets, because he's too busy saying the same thing, buy the good companies at the good prices, which is true, but also the types of returns that he gets are very much helped out by the business that he's in. You and I can't use this insurance float like he can. Whitney Tilson, a Berkshire shareholder and founder of Case Capital, says Buffett has always been savvy. He gets a lot of flack from people who really hate the fact that he wants to raise taxes on rich people. But it's not at all hypocritical to believe that tax rates are too low and to manage a business so as to keep its tax rate as low as possible. This is just a stupid quote, because yeah, it actually is hypocritical. If you're managing a business to keep the tax rate as low as possible, then realistically what this means is you got a team of accountants trying to find you every tax loophole, which is what every single corporation does. So this is a theory behind simplifying the tax system. There are people that believe that, hey, if you just make a flat tax rate for all corporations, simplify the tax code, such as say everyone pays 20%, then these companies are going to say, hey, 20%, that's okay. It's not worth all the money I'm giving to these accountants and all the headache that comes with trying to find these loopholes. Just take the 20% and we're good here. So there are people that argue that even if that 20% is lower than the 35% tax rate or whatever the corporate tax is at, the fact that these companies won't be avoiding it is actually going to bring in more tax revenue. Because really, as a business owner, no one wants to be playing this stupid tax game. It's such a waste of time every single year. I myself spend a bunch of time on it, not even to avoid taxes, just to figure out what the heck I'm supposed to pay. You would think you could just get a simple slip from the government that says, hey, you owe this much, but no, it's not like that. So Buffett is obviously a real big fan of his conglomerate structure because the tax benefits are huge. He says at Berkshire, we can, without incurring taxes or much in the way of other costs, move huge sums from businesses that have limited opportunities for incremental investment to other sectors with greater promise. So if we go back to this and ask ourselves, is this hypocritical, him wanting to raise taxes? Well, yeah, it kind of is, because he has the conglomerate, the rest of us don't. So he could play around with the taxes and avoid them, while the rest of us pay more. And when I say the rest of us, he's not necessarily talking about you and me, but other companies even. In my opinion, you just shouldn't be talking about raising taxes when you avoid most of them anyway. And that's not the only thing that Buffett and Berkshire do. They also have other tactics as well. So they've been able to exit several long-standing and highly profitable investments in recent years without triggering capital gains payments, thanks to unusual asset swap deals. Again, something you and I would never have access to because we get to pay that capital gain, so our favorite. So one example is they agreed to exchange 4.7 billion of their Procter & Gamble shares, of which they made a profit of more than 4 billion on, for Duracell, which was a P&G subsidiary. But the tax on the capital gain they made will not be paid unless Berkshire sells Duracell, which is another $1 billion+ tax liability that may never come due. Do any of us have that option? No. And that Duracell deal was the third asset swap that year. He also exchanged a minority stake in Graham Holdings for a TV station, and he swapped a stake in Phillips 66 for a subsidiary of the energy company. So he's doing a lot of things to avoid those taxes. And here's a little side note talking about Buffett's investment in solar. He's not doing it for the good of the planet or anything like that. He's doing it purely because he's making money off of the government's tax incentives. So like we said, they receive a lot of tax credits from their solar investments. So Buffett, when he was asked about it, he said, "I will do anything that is basically covered by the law to reduce Berkshire's tax rate. For example, on wind energy, we get a tax credit if we build a lot of wind farms. That's the only reason to build them. They don't make sense without the tax credit." So this is why they spent $15 billion on renewable energy. It's because of those tax credits that they use. But then, of course, a spokesperson came and said, in addition to these projects' environmental benefits, the investments have also created hundreds of jobs, jump-started local and rural economies, and provided annual payments of millions of dollars in local taxes and landowner lease payments. So, we're not just doing it for the tax credits, but in reality, yes, they are. So the point is you got to be careful when tracking these bigger guys like Buffett. And it's not just Buffett, it's all of these billionaires, because they are playing a game on a different level. It doesn't always apply to you and me. Like I said, though, go watch this playlist, especially this Monopolist video, because it really opens your eyes to what a guy like Buffett does. Again, there's a link to this playlist in this video and down below in the description and comments. So Buffett comes off as a friendly old grandpa, but really he's ruthless. He's a ruthless businessman. That's how he has billions and billions of dollars. And he uses every advantage, because why wouldn't you, right? And Buffett has advantages in the government and in the economy that none of us will have. So it's so funny that when we're tracking Buffett, people try to follow him in trades as if it's like a one-to-one. Like, oh, he's doing it for the same reasons. It must be a great company that would work for me. It's like, no, not really. His angle is completely different from what your angle could be. And we've been talking about Ray Dalio a lot and his whole CCP ties. He's another guy who's been coming out with so many articles praising the CCP in China, and we're like, what the heck, what are you doing? Because a lot of people will say, yeah, Dalio is completely objective. He's just telling us what's going to happen in the future by saying the CCP is going to take over. And while I used to agree with that, after tracking what he was saying for a long time, because I'm a big Dalio fan, I'm like, no, this is way too biased. There's something else going on. Now, will we know what's actually going on? Why he's promoting them so hard? No. But at this point, I'm starting to think that they have some dirt on him or his son, who used to have a lot of ties in China. He worked there for many years. And it's a classic CCP move to use that leverage to force people to do what you want. So now Dalio is being forced to walk the party line and use his influence to promote China. And again, that's just a theory. We'll never actually know, but nothing's ever too crazy when it comes to the CCP. And the point for this video is, again, what are his intentions in saying what he's saying? What angle is he approaching it from? And how is it different from your angle? So you can still learn from these guys, because there's a lot of great lessons from both Buffett and guys like Dalio, but you got to be careful, and you can't just blindly follow either. And even when we go into their investment strategies, what's great for them may not be optimal for you. There's different goals, different priorities, and different levels. That's why in this strategy that we talk about in this free training, which again, there's a link in this video and down below in the description and comments, but in that training, we go over a strategy that actually works for a person who is investing in the market part-time. So someone like you or me. And yes, this strategy makes incredible returns, but also it's not making 1,000% in a year. Because to make 1,000% in a year, which is possible in the stock market, you got to be playing at a completely different level, which is not possible for most people. We have guys who are making insane amounts in the market. They're in our Macro Ops group. Macro Ops is our professional research and consulting firm. But those guys are spending 20 hours a day on the market, and they've been doing it for decades. And that's why they're able to make so much money. And there's other considerations too, how much capital they're using, because it gets really finicky as you go higher, what their goals are, how much leverage they're taking on. There are so many different things. Just like there are so many different things when we look at Buffett's success. So that's why when I first introduced this strategy to our Fallible community, I made sure that it was very morphed towards someone who has a job, who wants to do it part-time, who has a reasonable risk tolerance, they want to be investing in the market, and that it's something that can be executed easily. It's very easy to use, small time commitment, not much time a week, but still makes amazing returns, so you can still build your wealth year after year. And that's why I use it too, instead of something more similar to a Buffett strategy or whatever I could make out of Buffett's investment, philosophy. And to make a strategy so easy to use, it wasn't actually easy to create it. I've been in the market for a long time, but my partners who I created the strategy with, they've been in the market for 40 years. They're my mentors. One of the guys had an office right next to Ray Dalio back in the day when they were trading on the floor. So again, even if you take that training and you're evaluating the strategy that I use, you again got to think, is this right for me? Same thing you would do with Buffett's strategy or Dalio's strategy. So moral of the story, always pay attention and do what's going to work for you. Learn as much as you can. Just like if you're paying attention, you probably saw this thing. This is a puppy that I finally acquired, which is very hard to do right now unless you have a puppy plug. You need the puppy plug. As you can see, she is wearing pink because she's a girl. Why get a girl puppy? Because people call me LLAK for a reason. Ladies love AK. And I decided to name her Algo because you guys know how much I hate the YouTube algo. So this way my greatest enemy becomes my greatest friend. No, I'm kidding. Her name is Luna. And you can see she's all black so that she could blend in with me because I refuse to change for anyone. And you guys know I only wear black tees. And this one only wears black too. There's really no reason for her to be in this video other than she said she wanted to be in a video. So fine. But okay, don't forget to watch that Buffett playlist and make sure you take that training as well. I will see you in the next video. Stay fallible out there. Bye.